with only a little over a week left of the year. Peter McGuire from XM is here to review the year that was in the Forex space. Pete, I remember once upon a time, and it's great to see you again, of course, have to disclose and push down the fourth wall very briefly that you were in the office for a little while today, so it was lovely to see you in the flesh. But there was a time that people used to whinge that there was no FX volatility in FX markets anymore. Well, I suppose this year kind of put pay to that. What was your kind of highlights of the year? And I mean, especially given you've got a bit more experience than most in this space, how does 2022 compare to previous years gone by when it comes to FX vol?
Well, good afternoon, Kyle. It was good. Certainly was good seeing you this morning, and it's nice to be back in the city and seeing all those wonderful tourists enjoying our city, and that tells everything, the storyline about currencies and the impact it has for. I think 22 will go down in history as one of the best years for traders. Institutional as well, but certainly the retail land, and the Mrs. Watanabe, the Japanese housewife trading on yen. It's been a year like no other, considering only a couple of months back we were at 150, now we're nearly at 130 for the yen. We had a move that's seen probably 40 or 50 yen movement over I suppose the last 9 months. I've never seen anything like it. Look what happened to the pound. Going back to September, 1.03, now we're at about 1.21. Have a look at the euro. So all of this has just been incredible opportunities, Kyle, and that's why it's a 24-hour-a-day, 5-day-a-week business. It's quite incredible, really.
Yeah, it's a massive market, of course. Do you think, though, that the volatility that we have seen in 2022, given the fact that, we've been told by central bankers that they're not quite at the end of their tightening, and of course we've got some concerns coming around recessions and what have you, that, some of this volatility could persist into 2023?
I think it will, Kyle. It's going to be a hard one to really rein in, I think, the inflation number, because it's still at very, very high levels. We've had a big move to the upside as far as energy prices in the last 12 days, nearly up 10% for Brent and WTI. We haven't got through the European or the Northern Hemisphere winter yet. You've got, I think, major concerns across Eurozone. The conflict in Ukraine hasn't been put to bed either. And the overall themes impressing the BRIC nations, China, Saudis, what's going on with the US dollar. I really think it's going to be quite an incredible time ahead over the next fortnight to month. And
I mean, I'll put you on the spot a little bit, I suppose, but be free to push back a little bit. But I mean, I guess one of the big questions is the dollar story. Do you think the dollar has peaked in this cycle now, or given the fact that maybe the Fed's still a little bit more aggressive than many other central banks on the margins, that there's going to be a risk-off play going on, that maybe the dollar still has some way to go? Of course, it will go a long way to informing what the Aussie dollar does. Do you have a bias when it comes to the US dollar?
Well, Kyle, I mean, you're at 114 going back a few months back, that US dollar index. It's the first market I look at when I wake up in the morning. I want to see how the US dollar's traded, and naturally the close of that New York session, and it's now sitting at 104. Now, what happens as far as Jay Powell and central bankers? We saw what happened with the yen during the week with the BOJ's announcement, and we'll see naturally. I feel that a 114, I think it's going to be very, very difficult for the US dollar to take that handle out again anytime soon. I wouldn't be surprised to see a little bit more uplift back up to between that 102, 107 sort of range. But we've just got to see how all the central banks move, not only in tandem, but I think there's going to be some divergence across strategy and policy in the first quarter. So, yeah, the US dollar is keep an eye on it, Kyle, because there'll be plenty of upside for all the markets that are valued. I don't think the Aussie, I think that's going to languish a little bit, but keep an eye on gold, my friend, and silver.
Okay, those precious metals. So you think there's going to be some sort of risk-off flow into that potentially, or is it going to be like a recession trade? What do you think the driving factors might be of gold there?
I think it's twofold. I think it's what you just mentioned there as far as risk off, but the other side is the global uncertainty, recessionary fears, the S&P down the best part of 13% for the year. Are we going to mirror those other big pullbacks that you see if you do have a wipeout like that? Is 23 going to be more severe to the downside for US equities? And the overall pace of the US dollar coming off, if it remains at these sort of levels, I think there's going to be that big safe haven play. As other markets capitulate, gold will take a very big upward tick. So I'm not going to go out there and say it's going to be 2000 anytime soon, but I feel as though there's more upside than downside for gold and silver in 23.
What about energy markets? Because that's going to be fascinating, because you've got the supply side risks on the one side. The war in Ukraine is still raging. OPEC could intervene if they want the price high. By the same token, there's concerns around global growth, and there's the China question that goes unanswered. What's the outlook, you think, or what should we be watching for when it comes to energy markets, oil in particular, of course?
Well, I think you've wrapped it up pretty well, because when you think about what can OPEC, what's their strategy. And naturally, they want to see higher prices. So you've got to wear that one on the chin, because that's just the state of their business model. And naturally, any producer wants a higher price than a cheaper price. But in the impact of that to the consumer land, and the impact as far as inflation, how's that going to run? Now, where OPEC play and where the energy markets play, I'm keeping a close eye on what the situation is with Russian crude, what's going on across that Eurozone with the winter, the winter conditions, and naturally the draw on energy, and how the overall energy market's going to be interpreted from a trade perspective. We're up 10% in the last 10 days or 11 days. Is that momentum going to continue while people are off the market and taking a bit of a breather and laying on a deck chair somewhere in the Caribbean, maybe, and on a beach in Queensland? Is the energy market's going to continue this uptick, Kyle? So that could be a quiet one till maybe the 5th or the 10th of January. Some more upside for energy.